The local index is expected to maintain its gains today after positive trade yesterday. South African markets closed in the green, boosted by gains in banking sector stocks. The rand strengthened against the US dollar. Fnb Wealth And Investments analyst Sithembile Bopela joins us now for a market review of some of the big business stories. Good morning to you as always. Let's start with an overview of how the local index and the rand are faring this morning after that slight rebound yesterday.
Very good morning to you and your viewers, and thanks for having me. So we have seen the JSE, I think extend the positive momentum from the beginning of this week, and it's been generally on the back of, I think investors are seemingly putting aside some of the fears around the interest rate trajectory from the major central banks following some hawkish commentary from the US Fed, but also from the SARB as well. And I think investors are now focusing more on the earnings releases that are coming out, especially from the US. We've seen quite a number of releases overnight, but even yesterday, that have effectively boosted market sentiments, as those have generally been more positive than was initially anticipated. But that's generally the story in the US. There's generally more caution around the earnings performance, and then there's a positive surprise, which is again positive for sentiment.
Sithembile, oil prices were also slightly higher this morning, and there was some industry data that showed a surprise drop in US crude stocks last week. So what is it telling us at this stage about how fuel is likely to move in the future?
So I think there's likely to continue to be some volatility in the oil markets. I think generally with, the prevailing geopolitical tensions that we've been seeing, as much as there has been an easing there, I think that the general, outlook for demand, given some of the constrained global macro factors at play, weaker demand in some of the larger consuming nations in the world, we're likely to see continued volatility in oil prices. As much as there is some upside, there's also, again, some downside risk, as I mentioned, because of that geopolitical risk.
Let's talk about Zido. It's an agribusiness-focused investment holding group. It crept back into the black in the year ending February. Their headline earnings per share improved. Talk us through their performance.
So it was actually quite a decent performance. The net asset value for the year did decrease about 4.6%, which was on the back of some payments of special dividends during the year. We did see they have been doing quite a bit of corporate actions. They did sell off the Cape Span business last year, and so some special dividend came through from that. But also they've seen an offset from the perspective of an improvement in the valuations of the unlisted underlying investee companies. And so I think generally, even with the outlook being a bit pessimistic, or maybe not pessimistic, but cautious because of some of the drought conditions from the El Nino cycle that are impacting summer yields. But I think the business remains well positioned given their strong balance sheets and the cash position that they have, and the management strategy to continue to unlock value for shareholders as they continue to unwind the structure, given the discounts, or the meaningful discounts that the share trades at to its underlying value.
So let's talk about PepsiCo then, Sithembile, and they reported better than expected revenue in the first quarter. What was driving that increase?
So they did see, as you mentioned, a good performance, and it was quite a good start for the new year, and I think a positive read across for the rest of the sector. They did see, some volume pressure, and that has been on the back of, they did have some price increases last year that were implemented, and so that did eat away at volume growth. But they did see decent uptick in revenue, particularly in the European markets. As much as the North America is their biggest market, Europe has been a better performer in this round. But on the downside, some of the emerging markets, Africa, South Asia, and Latin America, have been detractors to growth there. They did sustain just positive momentum across the beverage offerings, which was encouraging. And I think, generally operationally, they've been operating quite robustly, costs have been well managed, and an overall positive performance from them.
Well, thanks for keeping an eye on things and just sharing with us your perspective and some of the insight into why some market moves have been made. Sithembile Bopela is from Fnb Wealth and Investments.